Welcome back. Happy Thursday, everyone. Welcome back to yet another Earnings Lotto's Power Hour Live. I'm your host, Pete. As you know, we'll be using the next hour to find the best earnings stocks that report this afternoon and tomorrow morning. Please like the video and subscribe to the channel. Go to earningslottos.com, register for an account. It's completely free, always free. You can play earnings pick'em with us. You can view the deep dive like I'm going to show you today. Takes 30 seconds to get an account, and then you can do all this alongside of me. So hope everyone tuned in yesterday and traded love. If you did, massive congrats. Pretty decent win there. Not the best win, but I'll take 100% gain. 100% is okay. You know, we usually like 500% more in earnings, but I'll take 100%. That's not bad. No, 100% gain is a great trade. So yeah, congrats, Johnny, if you took that love call. We've had some bangers in the past few weeks. So not to be pessimistic, but I am due for some cooling off here, I think. But either way, we always will try to find the best movers that report earnings, and we will do that right here for today. So not too many to talk about this afternoon, but there are some interesting ones that kind of pique my interest a little bit. One of the highest EL score stocks reports today, so that's Argon, AGX. So we'll go through those details when we get to it and see if it is a candidate for a strangle. And actually, it'll be our first one, so we'll look at it right away. It is down almost 5% today, so that's kind of noteworthy. I mean, everything is kind of down today except for love, except for Lovesac. But yeah, AGX or Argon is it's pretty expensive. The contracts are usually pretty juiced on AGX. So this is one to play if you are a ballsy earnings trader. Ballsy meaning if you have a portfolio that can support contracts that are juiced like AGX. If you don't have a portfolio that can do that, if you don't feel comfortable buying these high price contracts for AGX, fade it. You're not going to miss anything. As you've known, or as you know, watching these streams and you know, for the past few weeks, or even like following the Twitter account for the past few years, earnings always offer opportunities. So as long as there are earnings reports, there's always going to be opportunities in the market. So don't let FOMO get to you. If you can't get AGX today because your portfolio can't support it, don't worry about it. You're not going to miss anything. Trust me. AGX, so more of a construction company. Looks like they have wholly owned subsidiaries, GPS, APC, TRC, and SMC. That means nothing to me. But yeah, more of a engineering, procurement, construction, commissioning company. Great EL score, 6 out of 8 quarters. It has made a 10% plus move up or down. And it actually has a pretty good expected move for this quarter's report at 17%. So getting a very nice 95 EL score. Narrative intel is really good on AGX. As we know, construction is bullish with a lot of power plant and data center expansion. So energy infrastructure remains very important, and AGX is a prime player in that. In the past year, looks like the stock has made a 330% gain. That's crazy. I don't know if I believe that, actually. That might be this narrative intel messing with me a little bit. Either way, a lot of cash on hand, zero debt. They beat last quarter by about 23% on EPS. So pretty bullish setup here for AGX. I'm not quite sure what the price to earnings ratio is, but I would imagine it's pretty good there. So yeah, clean energy transition and a multi-year visibility story. So as we talked about, like with Lovesac yesterday, Love is putting a more of an emphasis on renewable stuff. So that is a big theme, clean energy, renewable type stuff in 2026. The strangles that we're pulling in for AGX make sense to me. The call is 500. The 500 calls coming in, 20% out of the money up. Both of these are going to be monthlies, which I like. So it gives us a couple weeks to work with, a couple weeks of expiration or theta. Not a ton of volume on this 500 call. Decent. I mean, I guess like based on the contract price, like that's decent open interest, but doesn't really impress me. What does impress me is this 340p. So the 340p is almost 20% out of the money. Maybe we can call it 18%. Now look at this contract. So this is more than 10% out of the money, and the contract is coming in at $9. So what I usually say on these high EL score stocks that have juiced contracts is you really, really want to be at least, I would say 15% max out of the money. And it makes sense to pay up. Again, this is if your portfolio supports it. It makes sense to pay up for that premium if the stock has a consistent move history. So something like Argon, 6 out of 8 moves. MongoDB is a great example. Mongo is a 7 out of 8, maybe even 8 out of 8 mover. And the 10%, within 10% contracts of MongoDB when it reports, they're pretty juiced too. So for stocks like that, it does make sense to pay up and get closer to the money, as close to the money as you can comfortably get or afford. So I'll just throw that out there. The 340 is 18% out of the money. I would be more comfortable getting like a 350, 360, 370. I mean, obviously, as you go higher in strike, those are going to be more expensive contracts. But we'll open up unusual whales once we're done looking at all the stocks for today, and we'll see where this volume is coming from on the AGX 340p. But right now, to me, it looks it's probably a mix of bought and sold, I would imagine, because the contract price is around like that $11 range. They're probably bought. So we'll look at that a little later, because this does look like a pretty bearish scenario to me right off the bat. Veritone AI computing solution company, looks like AIware platform and hiring solutions. So maybe they're involved in like companies' content license. So maybe they're involved in like commercial enterprise and government customers, AIware platform and hiring solutions. Okay, so maybe of like more of a hiring solution type company. Any related support and maintenance services. So $2.65 for Veritone, very, very cheap stock. I don't like that, but look at the moves. So 7 out of the last 8 quarters, Veri has made a 10% plus move up or down. That's not really saying much off of a $2 stock. We're probably looking at like a 30, 40, maybe 50 cent increase, or that 50% around there would be like a 10%-ish change. So keep that in mind if you do trade something as cheap as Veri, to get as close to the money as you can or in the money. Again, because this is a consistent mover, it makes sense to pay as close to the money as possible. Don't get anything crazy out of the money, I would recommend. Veritone, good narrative intel, hot narrative intel, high torque. Looks like they are, okay, so they do like a Veritone data marketplace, Washington Post content deal. So they have a content deal with Washington Post, which to me seems bearish, because didn't like a ton of writers get fired recently? And Washington Post is just on a mass. I mean, Washington Post as a company is bearish. DoD, so maybe they have some Department of Defense stuff going on. Targeting profitability by late 2026, so they're not profitable yet. Revenue, 59% year over year expected. They delayed their earnings to finalize Q4 accounting. That's a yellow flag, but also means something material may have happened. Path to operating profitability is the whole thesis. So I would assume in this quarter's report, we will hear maybe they're now profitable, or maybe they're very close to being profitable. But the fact that they delayed their earnings is kind of weird to me. That's a red flag. Beyond, I apologize if you got Beyond yesterday. Beyond at like 10:30 Eastern yesterday came out and said that they were delaying their earnings until the end of the month. So that was great, but it's such a cheap stock and such a trash stock that I don't really think it matters. But always weird when companies delay or postpone earnings. That's kind of a red flag to me. The 3 call here is 13% out of the money up. I think that's too far out of the money up. But the volume over open interest is very interesting. There's a lot of volume versus 687 open interest. 250p, very, very cheap contract. Not a ton of volume, not a lot of open interest. I'm not interested in that. I'd be more interested in seeing what is going on with the 3 call. So we'll do that at the end. So we got AGX on the list and Veri on the list for looking at a little bit more in depth. But I would say Veri, probably the calls here. On the, I don't know, that chart does not look good. I would, if I had to guess, I would say calls on very as close to the money as you can as possible. Maybe they come out with their first profitable quarter. Maybe that's the case. Oxford Industries, OXM, kind of a cheaper stock coming in at $32 a share. They do apparel manufacturing. Looks like they distribute a few products that you might know under the brand name of Tommy Bahama, Lilly Pulitzer, that kind of stuff. That doesn't pique my interest at all. That both of those kind of seem like boomer brands, but it is what it is. The stock has made three moves over 10% in the last 8 quarters. So not great, not terrible, kind of, meh. Narrative Intel is interesting. It's one of those sleepers. I think Love had this same category yesterday. So I kind of like when the Narrative Intel gives us this sleeper connotation. It's interesting to me. Narrative Torque, leisure resort consumer spending read, apparel, lifestyle brands. Premium leisure brand in a cautious consumer environment. I mean, premium leisure brand, doesn't it just scream boomer? So they might as well just said boomer brand. Premium leisure brand. I wouldn't even call Lululemon premium leisure brand. Watch for direct-to-consumer comp store trends and inventory health. A beat and DTC momentum equals a gap. So there's possibility here. There was a few quarters ago that OXM did make a pretty impressive move. So it's been on my... It's just been on the data list for a little while. 35 call, getting more volume than open interest. I love to see that. I like that it's within 10% of the money. These look bullish to me. These look bought. The 30p at 8% out of the money down. $1.65, 19. These are probably bought too. I think the call side looks a little bit more realistic, but the 30p probably looks bought too. I don't know if I would strangle OXM if I was going to trade OXM for earnings, which I'm not. I would buy one side or the other, and I would probably, just based off of this, I would probably buy the 35 call. And I don't really care enough to look at the details in Unusual Whales, but anyone that's watching, if you guys do want me to look at something more in depth on Unusual Whales, it doesn't even have to be an earnings stock. It could be something else. End of last week, we looked at TSM, for example, saw some massive in the money puts. So we scalped puts from Thursday afternoon into Friday morning, and that worked really well. So happy to look at anything and dissect any of them. Blink, we won't look at because it doesn't look like there are liquid options, and it's a very, very cheap stock that I couldn't care less about. Sparrow Therapeutics is our next. So clinical stage biopharmaceutical firm focused on identifying commercial novel treatments for multi-drug resistant bacterial infections and rare diseases. Interesting. This kind of seems very similar to, there was a biotech yesterday that kind of this reminds me of. These, I think, are better plays outside of earnings. They are good stocks to look at in terms of options flow, because a lot of times options flow can indicate some FDA decisions, which FDA decisions always move biotech stocks one way or the other. So I'm not really interested in Sparrow right now, but we'll look at it still. 2 quarters out of the last 8, it's made a 10% plus move up or down. Not really great, especially on such a cheap stock, right? Something that's this cheap should be making consistent 10% moves. So if it's not, then it does concern me. It's definitely more of a grinder, so a low move candidate here for SPRO, Sparrow. And nothing interesting in the strangles. The 150p, this is too far out of the money. This is 40% out of the money down. So these are probably being sold, but nothing really looks interesting. There's a lot of open interest on the 250, so maybe traders are buying the 250 and selling the 150, although selling 20 contracts of the 150 is really weird. So don't really know what's going on there with the 150, but hard to say. I would say fade Spro, keep it on the back burner as something to keep an eye on for FDA catalysts. Johnny, we used to look at bot. So when they say, so with options contracts, you can buy to open options contracts, or you can sell to open options contracts. And actually, we'll look at, I'll show you an options chain in a little bit, but when you buy a contract to open, that's a bullish position. If you sell and you're buying it on the ask, that's where you buy it on the ask or the mid price, right? When you sell a contract, when you sell to open, you are essentially shorting the contract. So you not buy, but you're getting that contract on the bid. So anytime you see really big uh, orders on the bid, so which we'll look at in unusual whales in a second. Anytime you usually see really big orders on the bid, that usually, not all the time, but it usually indicates a bearish position. So we'll look at it a little bit more in depth, unusual whales. But when I see something that is too far out of the money one way or the other, right? Like usually 15% plus, that starts to raise red flags. When it's usually 15% plus or so out of the money one way or the other, the trader is likely shorting those contracts. So they're saying that they don't think the price will get there, if that makes sense. So if I shorted, let's say Argon, for example, AGX, a good short or a good thing to do, a good strategy on something like AGX, if you are bearish, if you think that the stock is going to go down, would be selling a way out of the money call, right? You want to short like a way out of the money call because it's never going to get there. So we'll look at it a little bit more in depth, but that's the idea. If a contract or an order is way out of the money on either side, and if it's a cheaper contract, that's the other key. If it's a cheaper contract, it usually implies a bearish sell to open position. Usually, not all the case, but if you see like 1,000 contracts filled on the bid, someone is selling those they're shorting that contract. If you see 1,000 contracts fill on the ask, they're buying those contracts to open. If you see a mix, usually a little bit harder to decipher. But that's kind of the long and short of it. Sorry for my ramble. Rani Therapeutics is our next. Yeah. You'll see, Johnny. You'll see like the more you trade, and if you're new to options trading, definitely paper trade first. You're not going to get the same exact fills as you would with real money, but it'll at least get you thinking about that kind of stuff. So definitely very helpful. Thinkorswim offers paper trading. That's what I use to trade. So Rani Therapeutics is our next one. Very, very cheap. I don't even want to spend time on this because it's too cheap. Has never made a 10% move in 2 quarters. 0 EL score. No liquid options. I'm off. Newsmax we'll look at. So this one's weird. I don't know if you guys know about Newsmax, but Newsmax is a very memey media production company right now. And I would say they probably lean more conservative, right-wing. Yeah, I mean, as you can see, lifestyle updates from its linear cable television and over-the-top news channels, websites, proprietary databases. So there's definitely some meme type stuff happening with Newsmax. Obviously, like, you know, when Trump talks about the media, he loves Fox News and hates literally every other media company. So there is like some sort of meme potential here with Newsmax. Very, very cheap stock, not something I normally would trade at all. This is way, way, way too cheap. No moves. This number is not exactly accurate. It's only reported 3 quarters publicly. So out of the last 3, it has never made a 10% move up or down, which always concerns me at such a cheap share price. But the narrative intel is interesting. It's good on Newsmax, right? So there's high torque. This is not its first full quarter. This is actually its third full quarter earnings. So that needs to be corrected. But meme stock DNA, good viewership. 2026 midterm cycles are ahead. They lean in like conservative media and cable TV. Stock surged 735% on IPO day back in March of last year, which is interesting, seeing as it is March of 2026. Looks like there is a Dominion lawsuit in the works that is kind of overhanging any profitability signal or guidance raise equals retail squeeze fuel. So yeah, there's probably a high short interest on Newsmax as well. And yeah, nailed it. High binary risk, but also high torque. So we're going to have to convince or persuade ourselves to play something here. The 7 call, 15% out of the money. So like right off the bat, this is a good example of something that looks sold to me. So this looks bearish, and when the 7 call looks bearish, then to me that tells me that this trader, they don't need the stock to go down. They just don't. They need it to not go over $7. So that's the benefit in selling a position to open or shorting a contract. So when you see someone, and it's not as linear. So if you see a trader shorting a contract or selling to open, don't take that as a directional down or a bearish bet. Basically, they make more money if the stock goes nowhere, if the stock just chops, because theta is going to eat this contract up. So that's it there. But I would imagine, and we'll look at the details just because I'm curious. Actually, let's just do it right now. So the 7 call for Newsmax, 400 volume over 59 open interest, very, very cheap contract. I am going to guess that the 7 call is sold. And if I'm wrong, I'm wrong. And yeah, so look, 400 contracts here on the bid. You can you can definitely put an order out there and say that you want to buy 5 contracts at the bid price. And then when the stock moves in whichever way you need it to, and your order can fill, right? Contracts can fill at the bid. For 404 contracts to fill on the bid, that's an order that happened immediately. So a market maker gave those 400 contracts and were able to fill it on the bid immediately. That wasn't someone waiting to get contracts, bullish contracts on the bid. So to me, Newsmax I wouldn't say it's a down move. So don't go out there buying crazy amounts of puts, but that tells me that this is probably a choppy move up or a choppy move down. That's what a sold position tells us. So that's all the ones for today. We got a lot of time today. We can take our time. Legence. I want to look at Legence. This one's interesting to me. I think this is their only report so far. This might be their first quarter. Oops, I clicked on the wrong thing. This is Legence's first quarter reporting. Yes, so that's interesting to me. They do engineering, installation, and maintenance services for mission critical systems in buildings, high growth sectors that have technically demanding buildings, including technology, life sciences, healthcare, and education, designing, fabricating, and installing complex HVAC, process piping, and other mechanical. You know what kind of buildings really like fabricate or installing complex HVAC systems are data centers. That's really what likes that. So without saying it explicitly in this description, Legence seems to me like a data center play. $54 a share, not bad, I guess. Like, that's okay. 17% expected move is good. That is what is attributing to the decent EL score, and maybe the float is too. I'm kind of curious as to what the float is. Narrative intel is interesting on LGN. So there is sleeper, this is a sleeper candidate, could gap 10 to 20% potentially, although it has never reported before. So we're kind of going in blind here. Commercial building, decarbonization. So decarbonization, again, going along with that 2026 renewable type theme. 616 million revenue expected. Large building services company writing energy efficiency mandates. So energy efficient data center play, maybe. The strangles that we're seeing, okay, classic. Like, this is another classic bearish sold position. I'm just guessing. The 80 call, 49% out of the money up, and it's 70 cents a contract. So 200 volume versus 386 open interest. This screams sold position. So this trader, if they're sold, if they're on the bid, this trader does not see LGN getting to 80 by April 17th. The 50p, this more classically looks like a bought position. Very closer, not very close, but closer to the money. So 7% out of the money down, right? The closer that you get to the current share price, you're going to be spending more. You get what you pay for. $2.90 was the last price traded on it. And there is good volume over open interest. That means that the volume, this 127 volume came in today. That shows immediacy. That shows that traders were anticipating LGN earnings and got these contracts today. Now, because this is LGN's first quarter report, likely these are people that have shares and they're buying puts to hedge against their share position, right? If the stock goes down tomorrow after earnings, they make money on their puts. If the stock goes up, they make money. Probably make more money on their shares, and they don't care about the hedge that they've lost on the puts. So that's what I would imagine there. Let's just look at it because we can, and I have unusual whales pulled up. So it's finding the 80 call, and it's finding the 80 call because that has the best volume and OI combined, even though that was from quite a while ago. And it looks like this trader, I mean, some are sold, some are bought. So that is, or unless they sold them to open and then bought them back, but the OI increased. So no, these are purchased contracts, this 14,000 order. And whoever sold these contracts is still in here too. So this to me looks like, I don't know if it's the same trader or a different trader, but someone sold to open 185. So they tried shorting it. Then a week later, they bought 200 at the ask for 14K. And all of that OI is still there. So that is a little indecisive to me, but we'll look at, because I want to look at the details a little bit more. Let's go through TMC. We'll do CCL, and then we'll look at unusual whales. We'll look at the options chains a little bit more there. TMC, Deep Sea Minerals Mining Exploration Company, coming in at $4.56 a share. Not a great EL score. Only 3 quarters. It's made a 10% plus move up or down. We don't really like that. Not the greatest narrative intel. Binary stock here. Pacific Ocean nodule mining for EV battery metals. So I mean, EV battery metals are definitely valuable and definitely a hot sector, but or an important item in a hot sector of EVs, Tesla stock, Rivian, that kind of thing. U.S. government strategic minerals interest, deep sea mining, polymetallic nodules. I don't think I've ever said that phrase, polymetallic nodules. I don't think I've ever said that ever in my whole life. No revenue, pre-commercial, EPS, not great. Trump admin strategic minerals push has renewed interest. So any federal contract, permit, or partnership is a gap up. Federal contracts and that kind of thing are likely to not be announced in an earnings call. So probably one to keep on the back burner, but I don't think it's an earnings play. And nothing here interests me. The 450p probably being bought because it's closer to the money, but couldn't care less about TMC. Let's look at CCL. So CCL Carnival, I mean, I think everyone knows Carnival Cruise, Royal Caribbean, another, Norwegian, another cruise stock. So CCL always gets a little bit of not notoriety, but popularity, I would say, during earnings season. And as you can see, it has not made a 10% move in 2 whole years. And it's only a $25 stock. So something that's $25 should be making consistent 10% moves. It's only a $2.50 move. The fact that it can't is concerning to me. So CCL is probably off my list. I'll have to really convince myself to gamble on it, but I do not like trading stocks they just can't. They can't reinforce the fact that they can move, right? They can't prove that they can move on earnings. So why would I spend money on it? It's just a complete gamble and it makes no sense. Narrative intel is good on CCL. Yeah, record bookings and deposits. You got a price surge in oil, fuel cost headwinds. I don't think people are stopping cruising or stopping from traveling. That still seems like a very bullish environment and sector to me. I just don't know if that will help catalyze CCL because it's kind of a technically poor stock. We'll look at the details in a second. I would say if you want to trade, let's say you're thinking about cruise lines and popularity and vacationing and that kind of thing, play a sympathy stock. So play RCL. I would much rather play RCL than CCL, and that's just based off of the technicals. So CCL, you can see very big share float, so 1.1 billion shares. The more shares that a stock has in its float, the more liquidity it takes to move the share price up and down. The more shares you have to buy in order to move the price up, and the more shares you have to sell in order to move the price down. So CCL has 1.1 billion shares in its float. That's pretty big. RCL, for comparison, has about 250 million shares. So RCL is much easier to move as far as stock structure. And if you do like that narrative of cruising and going on vacations and that kind of thing, then trade RCL. Use the information that you glean from CCL to position for RCL. I think, though, that's probably not the best idea. But I'll just put that out there. I'm not going to. Don't let me. If you have a strategy in mind, if you already have conviction, don't let me dissuade you from it. But just know that playing CCL over RCL is probably not the best idea. 27 call, getting interest here. A lot of volume, not more than open interest. Very cheap contract. Probably a mix of bought and sold. This is a little bit more ambiguous to read. 23p, 8.5% out of the money down. These contracts look very, very similar to me, so it's hard to tell without looking at the details if they are bought or sold, if they're on the bid or if they're on the ask. Decent volume and open interest. We'll look at the details. We'll just do that right now really quickly, but I think trying to force a trade in CCL is a recipe for a red position tomorrow. That's just my opinion. But we will look at it because I'm curious. So the CCL, I think it was pulling the 27 call. The 27 call, lot on the ask today, 58K on the ask today. Pretty big bearish order a few days ago. So 228K, that's bearish. There's just a lot of volume happening here in CCL. Let's look at the put side. It was the 23p. I would say if I had to guess, probably lean to the downside on CCL just based off of a quick glance. This 30p is likely being sold, although there is some interest on the ask. This is interesting. This is a decently sized order, 218K on the ask on March 6th, and that OI held, it looks like. So I don't know. CCL might go either way. If you're trading it, just trade one side. Don't strangle because it hasn't moved 10% in 2 years. Hard to say what's going on with CCL. I really don't want to look at it any more than just a minute or two because it's not worth trading. So I'm kind of off it. Let's look at AGX. So I think CCL is a fade. And if CCL pops 20% tomorrow, then congrats to you if you traded it, but that's a massive gamble. AGX, we were finding. So this is probably, AGX is probably our best quality setup for today. The 340p, let's see if those are bought. Wow, it's kind of a mix. Kind of a mix. So 435 contracts at the mid price. Those are probably bought. So those are probably bullish. 179 contracts at the ask. That's certainly bullish. Those are bought. 426 filled on the bid. That's hard to say. Like if it were a round number, 500, 1,000, something like that on the bid, then I would be more confident saying that that is a bearish position, but kind of hard to say here. Market maker could have filled some on the bid if this person was slapping 180 on the ask, 435 at the mid. I'm not quite sure if this is one trader. This could have just been a flurry of trades that came in at the same time. Here is 97 contracts at the bid for 130K. Hard to say. Hard to say here. It's not the cheapest contract either. So paying $9, $11 a contract, that's expensive. What are they doing with the 410? Look at all this money. That's a ton. 500 contracts at the ask for 4.2 million. That's a lot. That's definitely a lot of money. Anything more? Let's see if there's anything more affordable on the put side. 250p. Wow, that's a lot of the ask. What was that? That was February 12th. February 12th, someone put 39K on the ask for the 250p, and someone bought not a ton compared to that, but 1400 worth of that today. 250p is interesting. Let's look at this. Is really, to be honest, this is really our only high quality setup today. Nothing else has a consistent, maybe we'll look at Varia just because I'm kind of curious. But the move history is really what we want to focus on in earnings lottos, and nothing else really has a good consistent move history today. Let's look at some out of the money calls. So what would an affordable lotto call be? Maybe 600 call. See, that's a lot on the bid. 49 contracts were filled on the bid here. Now that's something to keep in mind is the market was obviously very red today, and AGX has been going down. It's at 5% loss today. So with the stock going down, maybe some of these were filled on the bid. There is some bullish behavior. 44K, 17K. What's up, Raj? So just trying to understand. I think I'm leaning down in AGX. Yeah. I mean, I think if you trade AGX, you should strangle it because it is a consistent mover. But right now, I'm just trying to find, because I'm not going to pay, I don't know about you, but I'm not going to pay $10 or $11 a contract for a lotto, an earnings lotto. That just ain't me. I'm like a $2, maybe I'll spend $3. If it's a consistent mover like AGX, maybe $3. 4.2 mil on the ask for the, or not all on the ask, but most of it for the 410. I mean, if you can afford it, then you want to pay up in AGX. You want to pay up as close to the money as possible. And I would go closer to the money on the put side and further out of the money on the call side, just so that you get better pricing. What's the 620? These are being sold and bought. I think AGX is down. I don't know if that 250 is viable. Like, that's a straight up lotto. Let's look at the 300. Kind of a mix. Where's this 150 come from? That's 117K on the axe for the 350, or the 300 rather. Let's look at the, and see, I bet if we go further out of the money down, we'll see some things on the bid, some sold to open orders. Where's the history for this? No way. Someone bought 90 contracts of the 140p in September for 52K, and it's been open the whole time. What is the 140p now? They bought him at like 580 a contract. Yeah, I like that, Raj. I like that. Yeah, just be careful. I mean, it is a consistent mover. Just be careful. Let's look at, that's crazy. I want to see what the AGX 140. That's way too far to the money down. That's crazy. I don't know what someone's doing there, but I mean, it's worthless now. So you're telling me someone bought 52,000 in September, left those contracts open, and they're okay with it going worthless? You're going to lose 52K just like that? Maybe they were doing something else. Maybe they had something on the call side to even it out. I'm not quite sure. But that's weird. What is let's see, the 250. Should we buy a contract? Should we buy the 250? Should we buy the 250p just to feel something? Maybe we can use the love money on it. That would be so crazy. I mean, the contract chart does not look like a layup, or it doesn't look like a fantastic trade. I think fade. I think fade it. That's a lot of liquidity. That's a lot of premium. But that's a massive gamble. I think if AGX, okay, here's what I think. I think AGX likely makes a down move, probably a 10% down move, almost to 340. I would say. I'll be shocked if it goes down. I mean, maybe they are, but I would imagine someone that's so if you buy it in September, when was AGX's last earnings? Was it in September? No, it was in. They did have one in September. They had on the 4th. Price 31. That's just interesting to me. 2-week move. Yeah, I don't know. I mean, I might be reading too much into it, but I think. Yeah, what's up, X Project Group? Only if you can afford it. That's the thing. That's what we were saying earlier. Only if your portfolio can support it. Like I don't have a portfolio where I feel comfortable spending $10 a contract for a lotto. But this 250p is so interesting to me. I can't stop. I can't look away. 500. Nah, okay, I think this is probably, yeah. I mean, there's sold. I would say AGX final decision. I'm going to fade it. But I do like that idea, Raj. I think the downside makes sense. I just don't see it going. I would be very surprised if it cracked 300, I would be very surprised. I would be very surprised. But people are thinking about it. Someone put 117K on the 300p in February. Let's look at Very. I don't know if I'll take that AGX Lotto, but if I do, it'll just be the put, because I don't think there's a call that I would want to pair it with. Maybe this 620 call. What's higher than the 620? Is there a 650? Maybe the 660, but this 660 is all sold. No, it's not all sold. Yeah, I mean, most of it is. I don't know. This is so tricky. We'll come back to it. Looks to me like a downside, but not a huge downside move right now. Let's look at Very. Very, we had the 3. The 3 is bought. Now this looks a little bit more convincing to me. This looks good. The 3 call looks way better than the 3P for sure. Am I really about to take a Very trade? Am I really about to trade something that's $3 a share? X Project says AGX to 650 or 300. Or AGX to 350. Or AGX to 450. And it really just messes everyone up. I think I'm going to get the Very 3 call. Let's look at the 3 call. I hate trading these kinds of stocks. I mean, usually I wouldn't trade something like Love, but consistent move history and looking at the options chain yesterday was just so obvious that we needed to do it. I don't know. No, I'm not going to do it. That would be funny. I mean, like, if you do take it, you take, like, 5 contracts. Do they have any price targets? What are the very price targets from analysts? What the? Is this real? They're all buys? What does this company do? You guys see this? It's a $3 stock. Should we take some calls? Is there like long dated? See if there's like long dated, way out of the money orders on the ask. Um, okay, let's look. Let me look at like fall, late summer. This doesn't mean much. It's a big order on the bid. So this is a bearish order, right? So this is someone that on March 4th, they sold to open 276 contracts at 45 cents. So what they are hoping is that the contract loses value. They want the contract to go down. So did they get their wish? They did, because it looks like on the 23rd, it was traded for 30 cents. So that trader is making money, and they're still making money on it right now. They don't need it to go over. If it goes over 550, they're screwed. But right now they're making money. They could sell today. Nothing else really. Is 550 the end of the chain? At least for 1120. Okay, here's some leaps. I'm really about to take very calls. Which sounds disgusting to say. You guys want to take very calls? 5 call. Ooh, some of these are on the bid. This is bearish, that's bearish, but that's not a ton of money compared to what was on the ask. What I've really wanted to do, like Western Union would have been a great one to do this with, but you find a cheap stock that has a good or somewhat good consistent move history of earnings, and then get on the right side, which is a 50-50 shot, obviously, but you get on the right side and then buy long dated out of the money contracts in addition to your earnings trade. God, one time. Like if you had it's at 260, so let's say you get the 3 call for earnings, right? You sell it by April 17th, and then you also buy like the November, not that because there's no OI on those, but then you also buy like the August 5s, and then you hold these until August. All right, let's do very. I'm gonna fade AGX. You guys are on your own for AGX, but I'm hoping for a down move. 3 call, right? Yeah, 3. I mean, it's like, yeah, let's do a 3 call. Why am I trading a $3? It's not even $3. It's $2.60. Why do I have Tilray calls? What am I doing with my life? All right, very, 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 very. Should we get 10? It's not that much. 7? Let's get 7 contracts. I'm not going to get any puts. I'm not going to get any puts. Just going to get the calls on very because I want to feel something. All right, I got the very 3 call. Should we get a... Look, I'll do this too. Because they're so cheap. Why would I not? And I'm not spending a lot of money, so if I lose, who cares? It's just love sack money. Money's fake anyways. Why is it not showing me more expirations? But what was the one I wanted to get? The August? Oh. Maybe if I did that. Okay, August 5. It's also cheap. All right. We ball. All right, so I got a few there too. So I got the three call for 417 and the 5 call for 821. Listen, I don't bet big. You don't need to bet big in earnings. Actually, like my motto or the motto that I hear often is play small, play often. Play often, I'm not quite sure about. We want to make sure that we're playing quality setups. So very 7 out of the last 8 quarters, it's made a 10% move. And a 10% move off of 265 should hit $3 ish. And if not, then we have until April 17th. So I like very. So I'm going to do the very calls. Very cheap. Just to feel something. And Legence, I think I'm going to fade. I'm going to fade Legence. Oh, let's see. Didn't we want to see where that 50? I think we looked at it actually. But yeah, Legence, I'm going to fade. AGX, I'm going to fade, but I do like the downside. If you are a cowboy trader, please buy some puts in AGX and then share screenshots with me tomorrow just so I can live vicariously through you. The 50p on Legence. Oh yeah, I think we did look at this and couldn't really tell where it was coming from. So I think those are probably hedges, share hedges. And then CCL, I couldn't really get a good read on CCL, right? That's the last earnings pick'em stock for this week. This looks bullish. 28 call got hit for a lot. I'm going to say CCL up. All right, let's do the earnings pick'em. And then I'll get out of here. 500 on up. Boom. All right, that's it. That's all I got. Did anyone, before we get off, we got 7 minutes. Did anyone want to look at anything? Any flow in unusual whales? Do you want to see the Trump filters flow or Trump filter flow? Where is it? Trump Lottos. These are ask dominant flow orders. As you can see, there's a lot of indecision today all over the market. MicroStrategy calls, MicroStrategy call. The puts also, iron calls, iron puts, Reddit puts. A Reddit put kind of looked interesting to me, but it is like down 10% today. It's just getting smoked. So I don't know about chasing a down move or shorting a hole there. More TSM puts, 287.50 puts expiring for next week. ASML 1075 put expiring next week. Kind of like that too. But I would just be careful. I think, obviously anything can happen. The market can turn around literally any second, right? Trump could come out and say whatever he says, and the market could make a move based on that. So just be careful shorting a hole, but here are some basic ideas. All right. That is all I have for today. I'm losing my voice for some reason. There's my fat cat. I hope you enjoyed this live. I hope you enjoyed the lives that I've done over the past few weeks. I have done better personally in my own portfolio as a result of it. So maybe some of that is just like talking out loud, talking through the strategies. A lot of it is probably your guys' interaction. So I really appreciate the comments and the likes, subscribing to the channel. It helps me a lot. The goal here is for us to find the highest quality earning setup so we make money on Lottos. That is the goal. So with that being said, enjoy your weekend. We hope for an AGX down move. Go very calls. You can find me on X at Earnings Lottos. We have a Discord channel. Everything is free. Pop in there, talk about earnings ideas, any other options ideas, or just general memeing and trolling. All up for all of it. So hope you enjoyed the stream. Have a great rest of your day. Happy weekend. Peace, everybody.